welcome. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Hi, I'm Agam Akil, and here are the top headlines this hour. The Nifty opens below 10,350 ahead of November F&O expiry. But open interest in Jindal Steel and SAIL surges after traders take fresh positions in their respective futures. And Bitcoin is back above the 10,000 mark. This is after falling to 9,000 from 11,000 all in just one day. And Reliance Communications had reached out to its Indian lenders in a bid to stop the China Development Bank from filing an insolvency plea, but to no avail. That's a Bloomberg Quint exclusive.
All right, let's take a look as to what's happening in the futures and options market. It is the final day of the November series, and well, we've started on a very weak note. In fact, the Nifty has breached the 10,300 mark. Until yesterday, the options data was suggesting that the expiry could take place in that range of 350 to 450, but that doesn't look possible, at least if you go by the numbers right now. The futures premium obviously are trading at a discount since it's the last day of the expiry. Let's also do a check on the December futures, what they are doing. That's the Bank Nifty there on your screen. It slipped as much as 200 points, and the premium for the November futures is currently about 11 points. Remember, Nifty has been consolidating in the last 4 sessions, and we've broken that range. In the last 4 sessions, you saw Nifty trading in that range of 10,360 to about 10,410 on the upside. That's the December futures. 10,318 is the rate there, and the premiums definitely are contracting in the last few sessions. We started on Monday with 57 points premium, and that's come down to almost 33 points. Premiums today overall, if you look at the option strike, they are contracting since the time value of money decreases, as this is the last day of the expiry. Now, what should be the range that one should watch out for today's session? Heavy call writing looks like the theme from the word go. India VIX has risen almost 2%, though we started the day when India VIX slipped below the mark of 13, but currently it's at 13.24, higher 1.5%. 10,300 call strike, do watch out for that. Yesterday, this call strike ended with a premium of almost 70 points. Now, writers of this strike are safe till the time index touches the mark of 10,380. So that should be the cap in terms of what should be the range for the market in today's session. On the upside, on the downside, we've seen heavy call writing. In fact, put writing is only seen for the 10,250 strike, but the 10,300 strike had a premium of 30 as of yesterday. So the writers of that strike are safe till the time Nifty touches the mark of 10,270. So watch out, that should be your first support, and the next support will come in at about 10,250 on the index. Well, what's the range that one can look out for the December series? As of now, the options data suggest it should be anywhere in the range of 10,000 to about 10,500. Just to give you a recap where we started this series. So Nifty started around the mark of 10,344. If you look at the returns right now, Nifty is down almost 50 points from the start of the November series, and the Bank Nifty is up. So that's been outperforming in this series. It's up almost, I think the numbers have changed now. It should be up only about 550 points or thereabouts. But volatility, that was pretty high. It's up almost 13 to 14%. Remember, we started this series at 11.6, and currently the volatility index is at about 13.2 Agam.
Well, Navneet, considering this is the last day of expiry, at least for the November series is concerned, what we're looking at is a substantial surge in OI in the November series for the likes of, Jindal Steel and Power, or for that matter, Hindustan Zinc. Both these counters from the metal pack are extremely active in today's day of trade. Let's take a look. There you have it. Of course, you also have Adani Power and Shriram Transport Finance looking at advances in their respective open interests for the futures, and Indian Bank, Coal India and HCL Technologies not too far behind. In terms of unwinding, and again, we will have substantial unwinding in a lot of these counters considering this is expiry. JSW Energy, IDFC, Bank of India, Apollo Tyres and Page Industries among the many others. But I am looking at increased activity in Jindal Steel as well as Hindustan Zinc, and I'm going to be watching out for that. Of course, other than that, Jet Airways, which has also moved out of the F&O ban.
Sure, and there are a lot of stock futures which will be in focus in today's trade. In fact, there were a lot of stocks which are out of the F&O ban, and probably by tomorrow, Agam, we won't see any stock, or probably one or two, because the trend has been changing. All right, before we get our guest on the show, here's a reminder. If you have any queries in the futures and options market. You can call us now on 022 4540 4141. You can also write to us on Twitter, Facebook with AskBQ hashtag. Let's welcome our F&O experts for the day then, Vishvesh Chauhan of Monarch Networth Capital and Gaurav Bissa of LKP Securities joins us on the show. Good morning to you, both of you gentlemen, and appreciate you joining us today on Bloomberg Quint. Gaurav, let me come to you. So far, till yesterday, it looked like Nifty was consolidating. The expiry could take place in that range of 350 to 450. But we had a gap down opening, and that's largely got to do with the global cues. The Asian markets in the morning were trading weak. Would you concur with the fact, I was just looking at the options data, that the first support could come in at about 10,270, and if that's also broken, 10,250 could also be possible?
Good morning. Well, that is a possibility, and supports of 10,280 that has already been touched upon. And if they do not hold, then the next supports would come to around 10,220. For Bank Nifty, 25,500 put option has been commanding very high OI concentration. So any dip towards 25,500 can incur some amount of supports. Again, looking the kind of downfall that we have seen, we opened gap down and then we have been making lower lows. So the momentum is weak for the time being. It's showing downtrend. My hope is that 25,500 would hold, and if that holds, then we can expect a bounce back coming. It can happen today also, a decent bounce back, or in next two to three trading sessions, we may see a bounce back coming in. 25,500 would be a key level for Bank Nifty. It would be key level for Nifty also, for the reason that if Bank Nifty bounces back, it will give a strong support to Nifty also.
Vishvesh, good morning to you. How are you viewing the benchmarks, especially when it comes to this expiry, that is today, and over the next 3 to 4 sessions?
See, I think today's day shouldn't be, given some sort of a discount in terms of there's an expiry. But we cannot ignore the fact that right now, you are failing from a 10,400, and Bank Nifty couldn't manage to, go about 26,000. So the very fact that the Nifty did not manage to, go above 10,400 for many sessions, and now that it is breaking down, gives me sort of a, uncomfortable feeling, at least for the shorter term. So I think expiry may be below 10,350. That is what it's looking like, and the way 10,300 is broken, my sense is that it can go further down also. So on the new series, what we are advising to our clients is that probably what you could do is you could create some sort of a bear spread with credit, and in that sense, my view is that market may consolidate. It can go down, but certainly I'm seeing a limited upside from the current levels.
Okay, let's shift our focus to options corner now, and Vishvesh was just talking about his strategy. He has a bear spread strategy. Before we take a look at his strategy, let's see what that exactly means. A bear spread is employed when one expects a moderate down move in a security. Well, in this strategy, a put option of a certain strike is purchased and a put option of a lower strike is simultaneously sold. Vishvesh, I'll come back to you. Could you take us through your strategy?
Yeah, so first of all, you have to assume that what is your view. So my guess is that right now in a very shorter term, you may feel that upside may be capped to the tune of 10,400, even a 10,500. Now you're talking about a downside. Since the 10,300 is now breaking, then probably you may want to take a view that what could be the next level of support. So that is turning out to be 10,100. Now the way I have constructed a strategy is that if the market remain at the same level, you will not incur loss, you will make profit. If market goes higher, you will still make a profit, and if market goes down, you'll still make a profit. And the reason we have constructed this strategy is keeping in the mind that we feel that market may remain at the same level or it may go down, but in a moderately. So what we do is you buy a one lot of 10,300, and since you're starting the new expiry from tomorrow, which is December, there is going to be a lot of time value in that puts. So what happens is that when you are buying a 10,300 put, you are paying 112 rupees, but at the same time you can reduce this cost by selling 10,100 put. Now in order to sell, we have a view that we are not seeing a right now market below 10,100. So what we are advising is that we are advising to construct a bear spread in the ratio 1:3. So you buy a 1 lot of 10,300 put option and you sell a 3 lot of 10,100 put option. So net you are getting a credit of 53 odd rupees. So that means if market goes up, you are making 53 rupees. If market remain at the same level, you are making a 53 rupees. If market goes down, you will make a more than 53 rupees, and if market expires at a 10,500, then this 53 rupees will become at a 200 odd rupees. So in that sense you will make a maximum profit. So this is the strategy which you employ at the start of the series when there is a lot of theta value. Now apparently if I had to suggest something in the current month, then it will be more like a speculation, because there is nothing right now, then it is just a gamma play. In my opinion, 10,300 is broken, and from where we are breaking down is giving me a feeling that it is a good idea to employ some sort of a credit spread with the view in mind of bearish downside also. So the 1:3 bear spread credit on the 10,300, 10,100 sounds good to me for the next expiry.
Okay, that's a very comprehensively explained bear spread on the December futures, or rather the December options when it comes to the Nifty. But well, Gaurav, how about you? Considering your view on the benchmark indices, how would you play these benchmarks when it comes to options specifically?
For today specifically, I would be recommending a buy on Nifty Bank 25,700 call options, quoting around 20 rupees. So if you get it around 10 to 15 rupees, which I think will be available in the next half an hour or so, one can have that. On the upside, targets would be around 40 to 50 rupees. One can have a small source of 2 or 3 and be long in the name. I would still give it a day. If we close below 10,280, then I would be having a slightly bearish view. Until unless we don't see that, there's a possibility that small bounce back can be seen. As I said, we have already seen a fall from 25,900 to 25,600 and below. So I think a small bounce cannot be ruled out. So I would rather play with a call option.
Okay, so Gaurav's betting on a bounce on Bank Nifty. Let's see whether that comes about or not. And remember, it is the expiry day, so you can expect volatility to come by in the last hour of trade. On that note, let's also look at a couple of stock futures then, which are buzzing in today's trade. Pull up Fortis Healthcare. This counter is seeing both price as well as open interest action. If you look at the underlying, that's up almost 4%. The November futures have added almost 5% in terms of open interest. The December futures, they've added as much as 16%. So that's telling you there are some fresh long build-up for the December series here. Vishvesh, Fortis Healthcare on the charts. I remember until 8-9 sessions back, this counter touched its fresh 52-week low. From thereabouts, it bounced back. Do you see it's bottomed out completely and one can expect the up move to continue from here on?
See, I think bottom out, it's a very bold statement in my opinion, but yeah, you can make a reasonably, probable guess that the lows around 125 is a very high probable lows, and those lows unlikely, or for that matter less likely to break in a near term. And definitely it's giving me a feeling that above 145 the stock has an upside till 160, 165. So probably I'm not sure about the liquidity for this stock in the options segment, but definitely one can consider going long in the stock. As I'm looking at the data, I guess in the next month 150 is having a decent set of an open interest. So probably what one could do is buy a 150 call option around the 6 rupees and 160 call option which happen a very less liquid, but it is around a 3 rupees. So you can short that. So that will be a bull call spread, a net debit of 300 rupees. Your break even would be somewhere around 153. So my guess is that 145 above, when I'm expecting a stock to go till 160, then probably what I would like to do is buy a 1 lot of 150 and probably sell a 2 or 3 lot of 160 call option and create some sort of credit spread. So even if the stock falls, I won't incur loss. Even if it stays at the same level, I won't incur loss. If it goes up, I'll make a profit. Even if it goes till 160, I'll make a lot of profit. If it goes above 160, then I have an issue. So right now I am not seeing the scenario wherein I'm expecting the stock to go above 165. So in that sense, above 145, I would want to construct a buy 150, sell 160 sort of a ratio call spread, and that is the strategy. Looks good on a Fortis for the December month. The only catch over here is that this happened to be very less liquid in the option space. So if somebody has to construct something over here, then probably putting a stop of 138 on a future, and one can buy a naked future.
Okay, I do want to highlight about three stocks from the metals, area, and that is Jindal Steel and Power, because it's looking at a lot of activity, at least in terms of open interest. That's the November futures. If we can also pull up the December futures, there has been a substantial increase. There you have it, a good amount of increase, and this is largely towards fresh longs. The other one is Hindustan Zinc, which, while the underlying hasn't moved too much, at least in today's day of trade, it is seeing substantial amount of accumulation when it comes to open interest for its December futures. Similarly, SAIL, which is also in focus on account of some news that we've had, it's really not looking at too much in change in terms of open interest, but it has seen a surge, or rather not change in its underlying, it has seen a change and surge in its open interest, up as much as 20%. Gaurav, if I may come to you on any of these counters, does any of this look interesting to you with respect to taking a position now over the span of the next few days?
Well, metals have been quite strong lately, and I don't think there's too much to worry about. There can be some dip in the metal space overall, but eventually the trend is quite strong. Among the names that you mentioned, one name that looks decent for trading is Hindustan Zinc. It's seeing good amount of accumulation, and 300 put option also has a good concentration. Immediate supports can be seen around those levels. So using that as a stop loss, one can play for bounce back targets of 315.
Okay, that's about Hindustan Zinc, and a view coming in on a couple of metals counter. Jindal Steel is the one which Agam highlighted at the start of the show. That stock is trading with gains of almost 2.5%. Well, what else is doing well today? Then it's Dabur. That stock's up almost closer to 2% at trading around those levels of 347. Underlying is up 2%. The December futures OI build up. Look at that, just 1 hour into trade and it's up almost 26%. Premium there is about closer to 1 rupee. Vishvesh, a view on Dabur on the charts. Would you recommend taking any sort of position here? And also tell us what are the rollovers indicating for Dabur if you have it handy in front of you?
See, apparently one thing I can tell you is that Dabur is one stock which has, in my opinion, in past used as a strategy which we called as, a covered call, for a simple reason because Dabur doesn't move much. So you would want to make a, some sort of a reasonable well by selling some sort of out of the money call. So right now rollover I'm looking at is a 41%. I don't have an average handy 3-month data, but I think this stock tend to do good on the rollover front. Nothing too much exciting. Now, if I had to look at the data in conjunction with the movement, then in my opinion, in a very, very shorter term, you would want to expect it to, break above 350 in order to make some sort of a, reasonable up move. So what I would suggest is this is a perfect stock where you want to create some sort of a covered call. So you buy a future, you sell a 360 rupees December call option, and what happens is that this stock is a slow mover, so you won't lose much on that 360 call option short also. So if I see 360 call option is right now trading at a 2.8, apparently this doesn't even have an open interest, so it altogether a different story. But I think 359 is something what you could expect slowly and gradually to move, but for that 350 need to be taken out. So this stock is definitely one stock which is likely to be in the range of 340 360 for a time being. So if there is an open interest in the option space, which is not, I would want to go and short strangle probably. But right now, looking at the data with a low roll, I would expect some sort of a cover call strategy over here.
Okay, so we'll move on to queries from our viewers, and a regular Girish Kumar writes to us. He has a bunch of queries, but I'm going to take one for now, and this has to do with Bosch. He has 2 lots of Bosch, and this is on the 20,200 December series. If I'm not mistaken, this is a futures contract. So can we pull up and see what the December series of the December futures of Bosch is doing? Stands at 20,388. So he is clearly in the money for now. He's making profits. Gaurav, if I may come to you, do you have a view on Bosch? It is looking at an increase in open interest, at least in today's day of trade, but how does it stand in terms of technicals?
Well, the immediate resistance are seen at somewhere around 20,500, and it's already seen a good bounce back from levels of 19,000, sub 19,000 to let's say 20,200, 20,300 in a matter of a day or two. I would not be too comfortable being very aggressively a buyer here, but one can hold on to the future positions. On the upside, targets of 20,500 immediately can be seen, and if that is held, then there will be a strong momentum that can continue towards 20,800, 20,850. So I would recommend holding on to the name, but I have a strict stop loss. As far as the futures are concerned, I think a 1% stop loss from the current price should be utilized, and on the upside, targets of 20,800 can be.
Okay, Girish, so you can hold on to your position in Bosch that you have, but Girish also has a query on Hexaware. He's bought 2 lots of December series 350 strike, and he's bought the call strike there. Well, he's not mentioned the premium, but I guess the current premium on that strike on the call side is almost 10 rupees. Vishvesh, a view on Hexaware, and what would you suggest, Girish? He's holding the call strike, 2 lots of that of December series.
See, apparently we are bullish on the Hexaware, and since last couple of days we are recommending buy. But I think 350, in my opinion, paying a 10 rupees will give him a break even of a 360 rupees, which is a 10% move on the stock. Now, that kind of apparently I'm not a very great fan of buying a naked call option for the simple reason because you are paying a debit, and on top of it, unless and until stock moves very rapidly, your delta of a 350 call option would be somewhere around 0.3. So if a 1 rupee rise of a Hexaware comes, your 0.30 paisa is about 350 call rise. So what if I had to suggest something, though I'm a bullish on a stock, what I would suggest is sell a 2 lot of a 360 call option, which is right now quoting at a 6 rupees 70 paisa. So that will give him a 13 rupees of a credit. So net minus 10 rupees, assuming the 10 is a cost, he'll make a 3 rupees of a credit. So even if the Hexaware remains at the same level, if it goes down or if it goes up, he'll definitely make a 3 rupees. If it goes up to 360 rupees, that will be the best scenario, because 360 will be losing its value, at the same time 350 will make money. So I guess what if I had to suggest him, hold on to his position, he can reduce his position by selling 2 lots of 360 call option.
All right, and well, Girish also has 2 lots of the Bharat Electronics call, and once again I'm assuming that this is the December series at 195. That's the that is the strike price at which he's taken it. Well. So the 195 call in the December, that's premium currently stands at around 5 points. Gaurav, do you have a view on Bharat Electronics? How do you view trade on this particular stock?
The stock have had a good run, but at 194, 195, saw a good amount of unwinding happening. I would not be comfortable holding on to the position. The current price that you mentioned is around 5 rupee. I think you can hold on to the position for the time being, have a stop loss of 3.5. If it sustains at 84, 185 for next day or two, then some sort of bounce back can be 91, 92, in which case he can tend to make some amount of profit, considering that he has bought around 5.5 rupees. If it goes towards 192, it can head towards levels of 7, 7.5. That can be the targets, stop loss of 3.5.
Okay, so those were a couple of queries which were sent by Girish Kumar. We'll just start with the trading strategies, and if we have more time, we'll squeeze in more of your queries. Vishvesh, I'll come to you first. What are your top trading ideas on the expiry day?
See, I think I have already discussed about the ratio spread on the index, wherein buy one lot of 10,300 and sell 3
any strategy on individual stocks that you have today? Any strategy on individual stocks?
Yeah, yes, I'm coming. I'm coming. So, like I said, index is the one strategy, and on stocks, 2 stocks I'm recommending. One is the Hexaware, buy with a stop of 330, target is 345, and second is a buy on a South Indian bank with a stop loss of 32 for the target of 35.
Okay, and Gaurav, how about you? What are you recommending our viewers today?
The first recommendation would be buy on Bajaj Auto. We have seen good amount of long positions getting built. It's given a break. So for targets of 3400, 3420. Second would be buy on Industry. We saw good amount of buying emerging, and a lot of long positions in getting built. 80 call option had a very high concentration for last 3-4 months. It's not trading above those levels. Using stops of 79, one can play for 85 kind of targets.
Okay, those were a couple of trading strategies from our experts. I'm just going to squeeze in one more query as it's come from a student. Piyush Pandey has written to us. He said that he's made a lot of loss in Nifty index call option in December month series, I guess, and his losses have accumulated to almost 70,000 rupees. And now he's asking, what do I do? Give me some index position from where I can recoup my losses. Vishvesh, I'll come to you. And before I go to him, Piyush, if you're trading in the futures and options market, remember you're leveraging yourself. So one important thumb rule which every expert will tell you, before, if you're taking any sort of position, do put a stop loss where you can at least restrict your losses. Vishvesh, any strategy for the December series that you can recommend Piyush, as he's already made losses of almost 70,000 rupees?
See, it's, I think, very sad, but apparently one doesn't understand the concept of leverage. It's a two-edged sword, like you mentioned, and apparently when you're leveraged, you have to be all the more, cautious. Now, the one thing which I can look at that, 10,000. Now, the problem over here is that everybody would want to make a money in a hurry. Now, I am taking this an opportunity to give some sort of a gyan, but you have to understand that best of the fund managers in the world are not able to make a 15% a year, or 18% is considered to be a very good return. Now people put on a 1 lakh rupees and they expect to make a 30,000 rupees by way of trading future, which apparently doesn't happen. So even if right now I had to make a strategy, or suggest a strategy, it would require a great amount of margin, because if I recommend on an index right now 1:3 a bear spread strategy, then you require a 3 lot of a margin on the futures on an option which you are selling, which is 10,100 put option. And there also there is a risk that if the index starts going below 10,100, then you may incur a loss. So apparently there is no easy way to say that, but looking at the current structure and everything, I would say that you may either buy a Hexaware, which I'm very confident to go higher, or the one stock which I would like to recommend, that is again from a 3 to 6 month point of view, you can buy a McLeod Russell. I'm very hopeful about the future of the McLeod Russell around a 227. My guess is that stock may not go below 180, 190, and stock has a probability to go to a 300.
Right.
So I think without any leverage, so if you have a 2 lakh rupees, buy a stock's worth of 2 lakh and hold on to the position.
Well, there you have it. McLeod Russell and Hexaware is something that you can at least try and employ. But we've run out of time right now. I want to thank both our experts, Vishvesh as well as Gaurav, for joining us and taking us through the strategies. But with that, it's a wrap on this edition of the Futures and Options Show. Stay tuned in Bloomberg Quint. There's lots more lined up.